That is in fact probably what he said. Good afternoon, morning, evening, night, whatever time it is for you. Welcome back to another episode. Go FUD Yourself. And today we are talking about our good friend Bitcoin. And so normally Fridays are FU Fridays. Don't worry, we've still got a couple FUs for you.
Oh, do we ever?
But first, we're going to talk about all things Bitcoin because obviously Bitcoin's been in the news a little bit lately. What specifically are we going to talk about, Kara?
A little bit. I think we have a 30-page brief of Bitcoin news, and it's not even all price. But we are going to talk about the price, and just to make our lives a little bit more interesting, I have a couple of images of price year to date, price year over year, price from 2016 to now, and price in the last day. So we will talk about price and why it matters.
Just wait, before anybody gets excited, we're gonna address what the price is and was. We are not going to predict. We are not going to predict it. So if you're watching the pod today, I was muted on Spaces, so nobody on Spaces could hear all that goodness.
Go ahead.
Anyways, it's all good.
If we tell them at the beginning we're not going to predict anything, they're not going to stick around for the episode, JD.
Yeah, they will. Nobody wants my predictions anyways.
Well, yeah, they want to
counter. It's always wrong.
Okay, yeah. So we are going to talk about price. We're going to talk about why the price matters and how the price can matter to signal what Bitcoin means to people in the future. But you're right, not future prices. We're going to talk about the potential price surge and why people think that's happening from a technical indicators perspective. But that is not financial advice. That's just what is being reported in the news. Mostly, we're here to remind you to have critical thought and DYOR. And then we'll go a little bit into other good blockchain news, such as the UK searches on Bitcoin are like out of control. And so possibly we're seeing bullish tendencies. Perhaps we're seeing positive sentiment in the marketplace. But then we're going to talk about ETFs and why we can't have them. That'll kill all the positive sentiment that we build up through the episode.
And we are talking about, where is that? The halving.
Oh yeah, we are going to talk about the halving.
It's exciting. All right. Well, you're in for a treat today because it's a big day, all things Bitcoin. Just a quick reminder, it's a live show, Monday to Friday, 12:30 p.m. Eastern, every single day. We're on all these venues. We're doing this, really just to help, like Kara said, help encourage critical thinking, doing your own research and taking a more objective approach to participating in the space. So that's the point. We're here every day, so like, subscribe, help us out, help us get the word out. I'm not wearing any merch today, but Kiara's got some Benki merch on, so we do a shout out to our friends at Benki for the hoodie. I think
you're wearing Psycho Bunny. Sometimes when I shout them out, they like us.
Okay, well, Psycho Bunny it is. I am not sponsored yet by Psycho Bunny, but if they want to send me free shit, I'm down. All right, enough of me jabbering on about.
Wait, before we go.
Oh.
I know. We are not going to be on Twitter for the next week. So if you want to find us, we will be on LinkedIn and YouTube.
Yeah. One week, no Twitter posting after today. So next Monday, if you're looking for us, go to YouTube.
We're doing a cleanse.
A cleanse, yep. It's a
Twitter cleanse?
Yeah. Do you remember like the cabbage soup diet?
That's exactly what I was thinking.
It's essentially that. We're doing a cabbage soup diet on Twitter. Yeah, so make sure we'll put some posts up under this video and we'll put it in big letters and stuff so everybody can see. And then, but we won't post next week saying that we're on YouTube because that defeats the purpose. Kind of like quitting drinking, but just having one in the morning when you wake up. Anyways, let's freaking go.
Are you ready to talk about Bitcoin price?
I am as ready as I'm going to be.
All right. So first and foremost, what is the price today? The price today is 34K. People are kind of upset about it being 34K because it's gone down a little bit, but it has gone up a lot since the last year. There's pretty good sentiment around it. People are saying that this will be the fifth bull, but that before we can get to the fifth bull, the price is going to have to see some fluctuation. Is this normal? You've been around for a lot of bull runs. What do you think?
Yeah, I mean, this is like such a consistent story every single transition from a bear to a bull, right? And let's be clear. I am firmly of the belief that we're not in a bull yet. Like we're still trying to figure out kind of what the inflection point's going to be and what, you know, what's really going to catapult us through the next cycle. That being said, nothing ever, even during bull seasons, goes straight up ever. There's always sell-offs and volatility in these assets. Even while they're going up, they're still volatile. And every time you have a big run up and then you have a correction, however significant that correction is, everybody panics and thinks, oh shit, it was just a fake rally and blah, 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 blah. And so anyways, I think there's a lot of reasons to be positive for Bitcoin. Absolutely. But I mean, this is the same narrative as every cycle at the beginning is, you know, I don't know.
Actually, on that, let's look at the cycles. Are you open to that? I have a screen caps.
I'm down.
Cycles.
Let's do it.
These are literally just from Google. So like, go find a better data source. But for the purposes of just looking at them on a screen, I thought that they were
careful. Pretty soon.
Oh, that's right. But what I mean is like the Google homepage is probably not your like critical thought homepage. That's what I'm trying to say. So why people are upset today is that Bitcoin is down for the day. This is our 1 day image. It's all in red. It's minus $146, I guess. People are like, oh no, the chart is red. It's so bad. But if you look at Bitcoin year to date, it's pretty
versus USD. Good. Yeah, it's doing okay. It's up. I think it's up like 70% or so. Was the number that was quoted? Maybe more now. Over the year.
Some people are saying 100% price surge because it was at some point in November, I believe, or December, just below 15K.
Yeah, it's always funny how people kind of cherry pick their date ranges, but anyways, that if you say year to date, so from January, you're like 16, 17K. So we're probably about 100%. Anyways, it doesn't matter. The point is, there's been a whole lot of discussion about how crypto's dead, and even in the wake of all of the negative sentiment around FTX and all this other shit, you know, there's still people meaningfully participating in Bitcoin, and that's obviously very promising in my opinion.
Part of why I wanted to show this image was that there was that big drop off in November, which I guess people could attribute to FTX and the negative sentiment at that time.
Well, a lot of that, a lot of that was FTX, obviously. But there was some more FTX drop offs in I think this last November. There was. Oh no, couldn't have been last November. That was FTX. When did that happen? That was not that long ago, though, that we had like a big drop off because everybody thought the FTX assets were getting sold.
Well, it looks like it could have been August, according to this wonderful little chart. But then if we also look at the year to date, this is the max. This is ever. So if you're really thinking about Bitcoin across the ages, what I thought was interesting about this is people are talking about how Bitcoin might be entering its 5th rally. And a lot of the information that we'll go through today says, oh, well, Bitcoin has to have this fluctuation. It hits a high and then it goes down and then it hits a high and then it goes down before it reaches its peak price. But of course, what we always struggle with in finance and especially crypto is like, yes, it's going to hit a high and then come down and then hit another high, but also it might hit a high and come down and not come back up, which you can see from some of the other runs in 2021. But it's just kind of fun to look at. It's fun to think about how Bitcoin was worth 0 and now is worth $34,000. I don't know. Do you have any other commentary on kind of like looking at charts like this and making sure that you aren't panicking because they've turned red for the day?
Yeah. I mean, when you look in a percentage basis, there's a decent amount of volatility every day. But when you look at a percentage basis, like even the chart that you showed intraday from today is, I mean, you're only going a total of $400 in variation, which is, up 1%, which isn't like that bad for a single day of a relatively volatile asset. I mean, the thing with Bitcoin, I think that's worth thinking about is the more expensive it gets, the more parabolic it has to go to get the crazy expectation of returns that people had early on, right? It went from $1 something in like 2013 to like $1,000 or something like that. And like that's a massive multiple for those people. And then it came crashing down. Like the first cycles were very violent. If you look back, like you can't even see them. They're not even clear on that chart because they're so small. But When you have $1 and $1,000, 1,000x to go 1,000x, $30,000. I mean,
absolutely.
Obviously, it's not, well, it is, I suppose, possible, but it's not likely in the short term. So, anyways, all of this to say, everybody always says, okay, well, it went 4x last cycle, so it has to at least get there and then do another 4x. I'm not sure I live firmly in that camp. That there's a significant step down in how significant, I guess, the percent gains are of each subsequent cycle. So all that to say, everybody thought last cycle that the previous peak had been 20,000. Everybody was saying, 4, 5x, 6x, nobody sell until 100 and some thousand. Well, we know that surely didn't happen. And so the thing that often happens in these environments is you get the prisoner's dilemma again. You get people saying, okay, well, if everybody's expecting it to get to 120, people are going to start selling off at 110. And because most people are going to sell off at 110, a bunch of other people are going to sell off at 100. And I'm going to say, fuck it to all of them. And I'm going to sell at 95 or 80 or something. And so that's what, and people sell, of course, and then the cascade happens. And then you see the dip. And then it's usually the retail people that are sitting there holding the bag. So if you're a retail trader, be careful. Like the advice, generally speak, not the advice, the way that I approach this for myself is I would way rather be in the market a lot longer and not stress about the perfect buy-in, the perfect exit, but rather just dollar cost average in, dollar cost average out. It's almost invariably one of the best strategies to maximize potential returns because you take emotion out of it. And as we all learn every single cycle, anything that is infused with our emotions usually doesn't turn out the way we hope.
You mean like this red chart that's upsetting people today? The other thing I think is interesting about what you've said about the percentages is how others are trying to forecast and essentially, in my opinion, create news about this. So a lot of quote unquote forecasters are saying that right now we're at 34,000. And if we hit 36,000, then we know that that's a significant level and we've hit a bull. But if we go back down to 32,000, that's going to be more sell pressure and we're definitely not in a bull. And that's what, 2%, 3% change?
Yeah. I'm surely not on that bandwagon. I'm not sure if they were saying, I interpreted that they were just saying, if it breaks 36, then it's game on. And I remember them saying a few weeks ago, if it breaks 32, it's game on. Yeah, I mean, there are many people.
The game doesn't end at the end of the day.
Well, especially in crypto, because there's no close of trading day. But I think people just need to take a step back and not try to chase the gains, right? It's so easy to do that in these types of environments. You're going, oh shit, it went from 30 to 34. I'm going to miss out on my buying opportunity. So I'm going to dump all my money in here. And then we see, I don't know, maybe a denial of the ETF, which we're not expecting at this point. And then everything comes crashing down and all of a sudden you're holding the bag again. And I mean, there's no way to meaningfully prevent that other than don't put all your money in at one price point. So
people are also worried in that same vein about this next one, because I just find it a little bit wacky doodle. This isn't the halving yet, okay? Well, like when we talk about the halving, that's a serious luxury goods issue. But this next one is about miner selling pressure and how since we went up to 35K, which some forecasters said was that breakthrough point, and now it's gone below 35K, that a number of Bitcoin miners are going to be struggling to cover operational costs. And so they're going to reduce operations and also thereby reduce the amount of Bitcoin available. So the price will go up, but it'll be harder to buy. And I'm like, what a weird arbitrary price you've selected for this.
Well, there is some logic around it because so every time that the halving happens, which we'll talk about in a minute, the difficulty of the equations that need to be solved to be selected to mine a block gets significantly harder. And so it's not always at the halving, but there's times where the difficulties changes depending on a million other factors. I'm actually not super well versed in that specifically. All of that to say, their cost center continues to go up. They need better and better hardware, better and better network capacity, better and better storage. Like it's pretty insane what these miners have to compete with. And so there's been a lot of narrative over the last couple of years that, most of these mining operations were able to not sell any of their accumulated Bitcoin because they had enough cash on hand from the last cycle to be able to participate through the bull or the bear market. Challenge is this was an extended bear market relative to what most people probably were predicting. So this is a real challenge, right? So these miners are saying, hey, if it gets to certain price points where we're like break even or making some profit, we gotta capitalize on that and sell some of our stock. Again, it's a very natural ebb and flow, right? Every time that a market moves up, we'll just talk about up, but every time the market moves up, there's some people that had it down here that need to, take some profit off the table. They're selling, and somebody else is buying, right? Because they think there's more room to go. And so I think the thing that I try to tell myself all the time is you can't beat yourself up for data that you didn't have, right?
Absolutely.
Like I can sell today, and then next week I'm either right or I'm wrong.
Yep.
But you can't beat yourself up. You can't beat yourself up for being wrong.
I guess this is why a lot of people want to look at indicators, like chart indicators.
Don't get me started on tech.
I know, which is like, I love to say that it's horoscopes for boys, but but some people are talking about the golden cross and how Bitcoin is about to hit that golden cross. So if you are doing TA, if you're a TA person, the idea of the golden cross is that the 50-day moving average is crossing the 200-day moving average. You can tell that I don't play with candlesticks. I
think it's 20 and 200, but anyways,
it says 50 here.
Is it 50? I thought it was 20.
I don't know. This just says 50. I don't know if it is 50.
Oh yeah, it is. Okay, yeah, it is. It is 50 and 200.
But the idea is that this golden cross is people are going to be bullish on it. And so it will hopefully impact market sentiment positively. We'll probably see more influx of purchase at that time because people believe that it's going to keep going up and not crash down. And then as people continue to purchase, it will continue to be in demand. And so it will go up. I don't know. I know that you're not a huge TA person, a huge technical analysis person, and I clearly am not. But do you think that indicators like this can predict the sentiment or anything of that nature?
Yeah. So I've spent a lot of time learning technical analysis over the course of a couple of decades. And essentially, to sum up, the prevailing research now suggests that pretty much none of them are actually predictive with meaningful statistical significance. So yes, they can predict shit sometimes, but it's not statistically significant, meaning you can't really count on it that much. And there's a lot left to subjective decision-making. The problem with TA is if I decide to do technical analysis on a 10-minute chart and you decide to do it on a 1-minute chart, we're going to have vastly different potential outcomes. And it also matters where on the chart you do your technical analysis. So if you're on a 5-minute chart, you might not see some of the little blips and candles and all that stuff that you would on a 1-minute chart. And that could negate your strategy or your idea. Anyways, there's a few technical analysis things that generally speaking are broad enough that they usually signify something. So if you go over a long enough time horizon and look for a big enough trigger, then you're going to find something. In this particular case, I think the golden cross is probably one that, I mean, it's pretty broad. Like you need a significant movement in price over somewhat of a consistent amount of time to get the golden cross. It doesn't happen very often. So all that's saying is not necessarily that it's meaningfully and statistically significantly predicting that things are going up. It's just saying, generally speaking, things have gone up for long enough and drastically enough that we're probably in some sort of a bull market. The thing with technical analysis is it's like one of those weird scenarios where it's like almost entirely driven by confirmation bias. Right. So, I mean, you do TA over and over and over and over again, and you think it's always working, but you must have just placed it wrong. You must have missed something. And then it works once, which probably can be assigned to chance. But it works once, and then you're like, oh, okay, it works. I'm in. And now the problem is that you'll actually see responses to certain TA things in the charts because everybody else is also expecting that shit to happen and are acting based on it. So it's almost creating the environment that it's actually trying to prevent, which is kind of surprising. But anyways, What?
I said, so it can kind of work, a little bit of work. Well, one thing that is consistent, if TA is not consistent across individuals based on how they're doing it, one thing that is consistent is that the Bitcoin halving will impact you. And I think this is pretty interesting. As Bitcoin halving happens, what, every 4-ish years?
It's a certain amount of blocks.
Yeah.
I can't remember. The last time that it happened, I think, was in 2020.
Yeah.
2020?
But essentially, every time there's a halving, the number of Bitcoins mined per block is reduced by half, which is why I call it the halving.
Yeah.
And so then there's a decrease in the rate of supply growth. And this,
Yeah.
in my mind, kind of makes it into more and more of a luxury good as time goes on, because there's only so much Bitcoin available anyways. But as we reduce the amount that's actually going to become more available, it moves further into that kind of luxury and reduced category.
Yeah. So like every time that there's a halving, the theory is that there's less expected volatility. There's less sell pressure, less inflation of the asset. The halving obviously was intended so that the total Bitcoin weren't going to eventually end up totally given out so that this is intended to continue in theory in perpetuity. 50% cut you can do forever almost. And so generally what happens is you'll see some price movement, right? Because less supply implies more scarcity. People are a little bit more confident in reduced volatility. Chances are there's been a couple of increases in difficulty between the halvings. And so now there's kind of the other side of impacts of a halving, and that is things become a little bit sketchy for miners for a little while, because now for the same amount of work with the same amount of competition, their revenue just got cut in half. And chances are difficulty has continued to go up. So their hardware costs and compute costs have also gone up. So a halving is really good in a lot of ways, because almost always is one of the inflection points for the change in market cycles. But also, I think it's really important just to watch, because we'll have to see how, if we're efficient enough as a market, that the miners still make money. And if the miners don't make money and they stop producing, it's a bit of a cycle, a vicious cycle, because miners stop producing, then Bitcoin becomes less performant, less people use Bitcoin, mining rewards go down, the amount of blocks, well, the chances of the blocks changing. Yeah, anyways, it's a cycle downward. And I mean, so we'll have to see. I'm always interested in these ones, because I really like to see how markets sort out challenging circumstances. Like capitalism just, in my mind, prevails almost always. And so it's always interesting to see how miners respond, how the markets respond. What I can tell you is I definitely don't try to trade the halving ever.
Right.
So, but grab some popcorn.
Watch it. So the last kind of things that we're going to touch on in terms of price are how Bitcoin has surged and there is a recession. So we did actually talk about this earlier in the week as well, that a lot of people are investing in Bitcoin, but not keeping it on a centralized exchange. They're putting it in cold storage. They're treating it like a hedge asset, or like gold used to be treated. And so people believe that despite the recession, Bitcoin is continuing to be purchased because people want to try to hedge their bets, but they also want to have some sort of like fallback for their own finances. I think this is really interesting, because while we see other luxury good purchases go down, we see Bitcoin's price go up.
Yeah, I think Bitcoin is beginning to permeate the common consciousness as a somewhat store of value, similar to, like you said, gold or some other kind of old examples of precious metals or stores of value that have to do with supply and demand, which creates the market price, which is almost everything, but especially precious metals and shit like that. I think over the years, Bitcoin has worked, but the Bitcoin community has worked to try to create the understanding that although it's not seemingly stable yet, it will eventually be, once the price goes up and there's a lot of demand and a lot of transaction, the price will stay in ranges, arbitrage will happen, you get market makers doing a lot of stuff in there, so you see a lot less volatility. When that happens, again, people are more inclined to say, oh, there's a lot less volatility, it's a good store of value, it's not going down when the rest of the market's dying. And we're in a unique kind of situation economically right now, where both fixed income products and equities are problematic. And that doesn't usually happen. There's no flight to safety right now. There's no oh shit, equities are going down, let's go to bonds. Right now there's a lot of risk in in pretty much everything economically, and so I think we're going to see a lot of people looking to divest themselves slightly from that uncertainty. They're probably not going to put their entire portfolio on Bitcoin, obviously, but I think we'll see more and more divesting, especially when the ETF is approved. I think we'll see a ton more divesting into Bitcoin, which is why people are so interested, because it's by far the one asset that the average person knows about with respect to crypto. And so once it's offered in their existing financial institutions via an ETF, I think you'll see a hell of a lot more divesting happen. I have some other thoughts on this, but I'll talk about it when we talk about the UK.
Yeah, we are almost there. So just to kind of wrap up the price, if you will, we have Bitcoin goes up and also down, but mostly up. And as we saw yesterday, we talked about LATAM and Bitcoin. A lot of different nations are excited about Bitcoin. They see it as an alternative to their current fiat system. But we're also just seeing that general sentiment in the Western world is raising, which is what you were just saying. As it comes into an ETF, it's likely that people will just invest day to day. We're also seeing searches for Bitcoin go up, both in Eastern Europe, where we have quite a few different crypto hubs, such as in Slovenia and Czech and what have you. Their searches soar. But in the UK, their Google and general internet searches for Bitcoin and blockchain and crypto are going up. And so I just kind of want to touch on Bitcoin goes up equals positive market sentiment, right? That's
generally speaking. So the thing about the UK, like if you've been paying attention to their politics at all in the last little bit, for whatever reason, I seem to have been, they are in they are in a significantly worse position than both Canada and the US economically. COVID and the spending and the inflation, like the inflation in the UK is like borderline hyperinflation at the moment. And they really don't know what to do. Like there's not a plan in the UK at the moment. And so again, I think we're going to see a hell of a lot more of this. This kind of builds on my point from before. When the fiat system, which at least was a maintenance of value, you could always just put your money in fiat and at least you thought you had the money there, but that gets crushed with inflation. And so now we're also seeing global inflation, and in particular in many Western countries. And for that reason, I think people are saying, oh shit, our currency is probably going to devalue significantly due to inflation / hyperinflation. How do we protect ourselves against that? And again, there's not a whole lot of options right now. Normally, you would say, okay, well, inflation's happening, but maybe because of said inflation, there's an equity boom, or there's something. Right now, there's nothing. There's nowhere to put assets just to preserve them, let alone pursue gains. So I think we're going to see more of this, honestly. Like if the economic situation globally continues, which I don't see how it could possibly change currently. Right. We're in massive wars globally, and there's no end in sight, really.
Yes.
So anyways, I think we'll see a lot of it. And personally, the more people looking for it, hopefully the more people find shows like ours that aren't trying to show you dumb shit or getting paid to sell stuff or any of that thing, because that's what always happens during these cycles. So an example, and just a public service announcement before we end for the day, but an example I think of, where people need to be really careful. You start Google searching, the random Google searches, the vast majority of scams and phishing scams in crypto are done by paid ads. So there's going to be so many more people that are unknowing, that are ignorant to the risks, that are going to end up sucked into these things. And then there's a lot of content creators that, again, have to commercialize it. Nothing against any of them. There's some great people out there, creating content also. But unfortunately, you get a lot of the kind of pump and dump, shilly guys that have really good reach, kind of degen, kind of connect quickly with, with that demographic. So hopefully people are a little bit cautious, but we'll see. We'll see what happens. I suspect we'll see a lot. I suspect we'll see a lot of scams. So that's going to be one of the things that plagues this next cycle, I think. This cycle, in my opinion, we should see a meaningful increase in retail and kind of mid-market adoption over the course of the next few years. And if that happens, we're in for a fun ride. I think. So, you know, people just have to pay attention and be vigilant. We're in for a fun ride, but if it gets crazy, one of the big narratives is going to be all the people that got scammed. Those naive new participants are always the ones at largest risk, and they're going to have a false sense of confidence because there's going to be some regulation and so on, but we're not going to be able to weed out all the bullshit early on. So be careful. Obviously, don't click on any crypto shit that's an ad ever on any social platform, on Google, anywhere. Don't ever click on a crypto ad. They're almost always scams. Legitimate companies trying to advertise get banned almost instantly, hence why we're banned or why we can't post on Twitter for a minute, because we've got shadow banned for no reason. But I mean, anyways, be careful. Just be vigilant. If something seems a little weird, why do I have to connect my wallet here? What am I giving permissions? Just don't do it. Ask somebody that knows that can actually read the code and see what you're clicking. Like that's all there is to it. So to end the show today, be careful. This weekend, we've got you covered. So go touch some grass, or here, go touch some snow.
It's so cold.
Who would live in a place like this? Like, it's unbelievable. But I'm back to Miami this weekend, so I'll be getting a tan on Saturday.
We are going to talk about ETFs and the SEC trying to sue BlackRock and settling on Monday. So we'll cover that, and we'll cover any weekend news. But I think a lot of the weekend news is still just going to be Bitcoin price. So
yeah, we got to, in the interest of FU Friday, FU Gensler again for everything that you fuck up, but specifically. Yeah, but specifically just for being you. I had a big FU to Gensler because he was bragging the other day about how they had $5 billion of revenue from enforcement actions. And that to me just says, there you go. That to me just says opportunistic. It's an agency that has unfettered power, and they can just go and fucking sue people however much they determine. And it's very difficult. Most companies just pay to avoid the public criticism. It's crazy. Like $5 billion for the SEC. Like, obviously we're not, that has now become a for-profit business. That's not a regulator that's trying to protect the consumer. Like, it's, anyways. But I do get it. The fines also have to be big because a lot of these companies have very deep pockets. So you give BlackRock a $500,000 fine, they probably spent that on straws this month. Like, I mean.
On straws specifically?
Hey,
they straws at BlackRock?
Probably not. They're probably worried about the turtles in Chicago, or wherever the hell BlackRock is. I think it's in Chicago. I can't remember. Anyway.
All right. That is
enough nonsense.
Next week we are not on Twitter. Come find us on YouTube. Come find us on LinkedIn. Ideally YouTube, because then you can actually type in the comments and we can respond to you.
And Twitch.
This is how you type, right?
I just smash the keyboard.
All right.
Kind of like Hulk smash.
Thank you for joining us.
Yeah, thanks for joining. We're a live show Monday to Friday, 12:30 p.m. Eastern. Have a beautiful weekend. Like, share, subscribe. And with that, today we say to you, Ceara, go find yourself.
Find yourself.